today we are going to talk about Bitcoin. The analysis will be extremely simple and very brief because the situation on the chart is quite clear and there can't be any double interpretations. If you find it useful, then pay attention to the recommendation I will give at the end of this review. Let's start with the weekly candles. Notice that on the weekly candles, a bearish crossover is forming between the 50-week and the 100-week moving averages. The 50-week is green and the 100-week is red. At the same time, we can see that for 3 weeks in a row, Bitcoin has been trying to break below the 200-week moving average. And finally, it looks like it has managed to do so. Yes, it's too early to draw conclusions because today is only midday Saturday and we need to wait for the weekly candle to close on Sunday. But this is a very bad situation for Bitcoin for two reasons at once. First, after Bitcoin was trading here in a sideways range and then moved up, we could have expected it to rise to the 100-week moving average. That didn't happen. What happened was that in the week starting June 1st, Bitcoin had its lowest weekly candle close in 2026 and set a new yearly low. And after that, for 2 weeks, we kept testing the 200-week moving average, and it looks like we've broken through it. This means that our next downside target is the 300-week moving average, which is around $54,500. And at the same time, it's the area of those very low trading levels. Again, that's $54,500 to $55,000. There is absolutely nothing positive on the Bitcoin weekly chart. Let's look at the monthly candles. And here, I want to highlight 2 points. First, this current month has already set a new yearly low. Second, technically, it looks like the beginning of a new downward wave. Why? Because the decline that started in October and ended in February was followed by 3 months of growth. Yes, the third month, May, is a red candle, but it did set a new 3-month high. And this means that after the decline, we saw a corrective wave, and now we are getting a new downward wave, which, according to Elliott wave analysis, would be the third wave in the sequence. The first decline, the second correction, the third decline. And according to Elliott, the third wave is the longest. This means it will reach at least the 100-month moving average, which is around $40,000. But as long as the 5-month moving average hasn't been broken, there is still a chance that the decline won't continue and that a reversal could occur. It's a small chance, but it still exists. But overall, both the monthly and weekly candles point to a continued move downward. Now I'll go ahead and enable the markup, so you can take a look at specifically a few more things here. Look, we have a white dashed line drawn through the lows of December 2018 and November 2020. Notice that in February of this year, we came very close to it. And now, in June 2026, we've broken below it. This is a very bad signal, just a very bad signal. Yes, in a sense, it allows for a rebound somewhere to the middle of the June candlestick, which is around $66,000, $67,000, and the closing point of the February candlestick. But that's probably the limit of the correction we can expect from the perspective of the chart structure. It's more likely that we'll see a decline into this red area, which is defined by some important levels. Here we had an intermediate stop before the subsequent decline. This is the $45,500 level. Here we had the end of the major drop according to the monthly candlesticks. At that time, Bitcoin fell from a high of $65,000 to a low of about $29,000, but the monthly candlestick closed at $35,000. This is the second level. And finally, the third level is the base of the February 2024 candlestick, because we've already tested its closing point, and now we may test the opening point of this candlestick. And the combination of these levels falls within the area of the 100-month moving average. This is the target zone for the decline, that is, from $35,000 to $45,500. Also note that the RSI indicator broke through the 50 level, then retested it from below, and now is already pointing toward the 30 level area. This also doesn't add any optimism for buyers. And that's not even mentioning the stock market, where things aren't very good either. In fact, you could even say they're quite bad. And finally, let's switch to the daily candles to see the current situation. And try to assess it. Take note, Bitcoin has broken through the $60,884 level. That's the level where we saw the lowest close on June 6, 2026. After that, there was a strong rebound to around $67,500, and now that level has been broken. In other words, we've had the lowest daily candle close of the current year. And the current rebound is nothing more than a correction. We can only talk about growth when, first of all, we see that the daily candle has closed above the level of $60,884, and secondly, that it has engulfed this orange candle of decline from June 25th by closing above approximately $61,100. Only in this case can we assume growth, with the first target being the level of $62,700 and the next one at $64,000. And potentially we could once again reach this dashed line on the monthly candles. That's $68,000 to $69,000. It's not forbidden. Supporting the case for growth is a potential bullish divergence, or more accurately, convergence. Take note, lower price lows followed by a higher RSI low. And this indicates that yes, growth is possible, but there can be no talk of buying until we see a daily close above $61,100. At the same time, this same level, $60,800, $61,100, serves as a potentially interesting entry point for a short position. If in this area you observe a bearish engulfing pattern on the hourly or 4-hour candles, you can try to open a short position, aiming for targets around 55, 45, 35, or perhaps even significantly lower if the stock market helps us. And now, what I promised to say at the end. If you trust my analysis, if you find it competent and reasonable, then take my recommendation into account. We did all of this on the QuantFury platform. Here you can trade without any commissions. That is, they are zero. Absolutely every single fee you can think of with Node is completely non-existent. This represents your mathematical expected value, which has been shifted significantly in your favor, and this ultimately increases your overall chances of achieving success in the world of trading. Because whenever you are required to pay any type of commissions, whether they are very small or quite large, you are effectively shifting your odds toward failure. This happens since the market price must move a specific distance that is equal to the sum of all those fees and commissions just for you to finally reach a point of absolute break-even. Take this advice into consideration. The QR code is on your screen. Join our community of traders on the QuantFury platform. And with that, I say goodbye to you. See you next time. Goodbye.